Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kaini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja biar tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that the lotus
Doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty, untouched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that is the story of this young woman's small tailor shop that has been quietly helping hundreds of women piece their lives together again.
All right, morning everyone. Welcome back to Morning Kappa. Okay, so if you look at the S&P 500, well, it finished higher on Wednesday session, climbing 0.81 points to close at 6946.12 points as investors aggressively bought into the tech stock sector, right? So I think yesterday after the closing bell, the Nvidia delivered robust earnings results exceeding expectation with a record of a 60 uh, billion revenue, right? Driven by the massive data center demand and also sparking a strong after-hour rally. So following the gap up move in Wall Street, I think we do expect the bullish to continue and highly optimistic opening into today's session as Nvidia massive earnings beat reignites the global AI rally and also fuels the broader market confidence, right? So right, looking at the US trading stocks that we have today, I mean, we publish overnight, right? We publish Delta Airlines, stock code DAL. So the stock is experiencing a pending breakout at 70 US dollar. We can now expect the stock to travel towards the 75 dollar on a strong momentum, followed by the next resistance at $80 level. Now, if the counter reverse, do watch out for $65 support for the immediate support, as it could indicate an initial trend reversal. Also, next we have Freeport McMoran, stock code FCX, right? So look at the charts now. The counter charted a higher high market structure, breaching this $65 level. So if the stock to climb up higher, we could see that it might travel towards this $70 level, followed by $75 level. So now if the stock slides lower, below this 60, this might shift to a bearish structure. So we have one pending and also one breakout stocks for US trading stocks, right? Right. So for the China A50 futures, so it finished slightly higher on Wednesday session, climbing roughly around 0.6% to close at 14,785 points, though it largely moved sideways throughout the session. So I think the market consolidated as the investors balance fresh optimism over Shanghai relaxed home buying rules, and also resilient domestic tech sector against a broader caution ahead of the key US economic data. Also, do expect a range bound to follow through, right? But supported opening in today's session as traders await for a clearer uh, the clearer direction from the global trade development and the ongoing uh, uh, tech narrative, right? So, well, moving on to the WTI futures, well, crude oil futures will finish lower on Wednesday. I mean, pulling back to close somewhere around $65 level per barrel, down by 0.78%, 0.78% yesterday. So the market traded under pressure, um, as a massive, unexpected surge in the US inventories, jumping nearly 15 million barrels, completely overpower the lingering war premium from the ongoing US-Iran tension. So for this, for this WTI future, for WTI futures, we'll expect a cautious and highly sensitive opening for today, as again trade away on the growing domestic supply against the critical US-Iran nuclear talk, uh, taking place in Geneva, right? So moving on to our local market, our Malaysia market. Now, if you see the KLCI and the FKLI finish slightly lower on Wednesday session as investors lock in profits on the heavyweights, blue chip, to take a breather after the recent rally. However, I mean, the overall market sentiment remained positive as buying interest rotated into the small cap index, which successfully rebounded on the strong bargain hunting yesterday. So, yeah, for our market, I mean, expect a mixed sentiment, but resilient opening in today's session. I mean, traders balance this ongoing profit taking against the growing appetite for lower price stocks. So yeah, I mean, for the heat map right here, I mean, we saw some persistent selling pressure in major heavyweight counters, particularly in those utility um, uh, 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 sector, right, and consumer sector as well, which offset the relatively positive openings uh, season. Right. I mean, on the brighter note, tech and also construction stocks show resilience with the MPI leading the gains. We see Suncon also continuing its steady momentum yesterday. As for the market breadth, I think well, it remains somewhat balanced but cautious as traders keep a close eye, you know, on the US, on the 10-year US Treasury yield and potential tariff announcement. So for now, keep an eye at this level for KLCI 7070 followed by 7080. Well, for FKLI, we still remain our positive trading bias, eyeing for 7090 as well as 1820 points level, right? Also, in terms of sectoral performance, if you see here, construction and also industrial production led the gains yesterday with 1.03%, followed by together with 0.78% respectively. And I think if you would like some stock suggestions, right? So please refer to these highlighted names. We have Binasra, MN, Chining, and also some other names. Right. So I think also, if I can share with you, yesterday we noticed that this IAB or Insight Analytics has gained up by over 3%. Well, it also have crossed above this 21-day moving average, signaling the minor trend is now showing a strong bullish signal, right? So also, if you see here, this RSI is now trending up higher together with the MACDs now have potential turning higher to cross above the signal line. Now, if the bullish remains, I mean, the stock the price, the stock could trend towards this 1 ringgit and 90 cent, followed by 2 ringgit and 10 cent, according to this Fibonacci projection level based on this wave, the first wave right here. Okay, and for our Malaysia trading stocks, we have MPI, our Malaysian Pacific Industries for today. So the stock is on its breakout formation at this 31 ringgit and 50 cent level on a strong volume. So with that, we expect the momentum to keep bullish and the stock able to fly to propel higher to test this 33 ringgit and 50 cent together with 35 ringgit 50 cent for the second resistance. So if the stock clear below 29 ringgit 50 cent, this could reverse the course and trend lower. Also, we have Malaysia Smelting Corporation, or MSC. So the stock experiencing a breakout as well at 1 ringgit and 85 cent. And if stock remains bullish, we expect the price to reach somewhere around 2 ringgit resistance, followed by 2 ringgit and 10 2 ringgit and 10 cent resistance in the coming session with high volume as well. So keep an eye at 1.75 for any attempt of reversal. So we have two breakout stocks for today, which is MPI and also MSC, which is Malaysia Smelting Corp. Right. And lastly for the FCPO, well, it finished I would say sideways on yesterday, settling somewhere around 53 ringgit per ton to snap these 3 day or 3 session losing streak. Right. So I think the market traded in a tight range due to the support from the stronger rival oils in the other exchange, right, was offset by lingering concern over the sluggish Malaysian export estimates for the first 20 days of this month. So I think expect a consolidation and also a range-bound movement for today's session, as price projected to stabilize somewhere around 4,000 ringgit level, which also align with what we our expectation, right? So we keep our negative trading bias unchanged for this 4,000 level, followed by 3,850 ringgit level. Right, so I'll stop here and pass you to the next presenter. Thanks everyone and happy trading.
Hi, morning everyone. I will be presenting on MBM. So we have an MBM resources results preview. We are upgrading the stock to a buy with a new target price of 6 ringgit. Really, the main thesis for this upgrade is the valuation angle, whereby currently it's trading within its 3-year mean versus plus 1.5 SD during the all-time high in TIV in 2024. Four things for me. The first one is we are expecting MBM results to come in between 95 to 110 million, which is estimated to be an all-time high quarter. Secondly, in terms of product demand, it's still resilient, which is it's not new, but however, we have the new product trust, which have secured over than 5,000 bookings in 2 weeks' time. And in the month of January alone, it's already the top 10 registered models in Malaysia, and its units and its volumes are almost double versus Ativa. Thirdly, in terms of the dollar angle, we estimate that every 1% up in ringgit will lead to a increase of 1 to 2% in MBM's bottom line. And lastly, in terms of share price correlation with dollar, we note that the correlation now is minus 0.8 versus plus 0.2 in 2025. So meaning if this correlation remains intact, every 1% up in ringgit or every 1% down in dollar will lead to a plus 0.8% in MBM's share price, assuming all else is equal. Yeah, that is all from me. Thank you so much. And I pass on to the next speaker.
Thanks, Iftaar. Okay, so we have a results note on Public Bank this morning. This is the final quarter results, which were in line with our and consensus estimates. The net profit, 1.9 billion ringgit, was up 2% Q on Q and 4% year on year. Full year net profit, 7 billion ringgit, was quite flat. ROE was about 13%, within the revised 12.5 to 13% guidance, while the CET1 ratio is actually still very healthy. The sequential rise in net profit, this was mainly due to lower minorities, but really, if you look at it, PBT was flat. But having said that, we do highlight that there was actually a 2 bips margin expansion sequentially. Typically, the December quarter margin tends to be under pressure because of seasonal deposit competition. But this round, because of the repricing of deposits, this was positively felt on margins. Other than that, I think it's quite stable for the other line items. For 2026 outlook, management is guiding for 4 to 5% loans growth. They're looking at stable to mid-single digit NIM compression, about 12 to 13% ROE, and they also guided for a 60% dividend payout. This is unchanged from the 60% payout in 2025. where there was also a bit more news is on the upcoming new Basel guidelines on capital. Management said that there will be an uplift of about 100 basis points upon its adoption. And, while they could not share more details on it, management did reassure us that they are looking to actually optimize its capital and its ROEs. So based on that comment, we do think that aside from the 60% ordinary dividend payout, public bank will also return that excess capital to shareholders. We estimate this amount to be about 3 billion ringgit or about 15 cents per share. And similar to what the Singapore banks have done, we think they could actually opt to stagger this return over a couple of years. No change to our earnings forecast, or rather the changes are quite immaterial, but we did raise our target price to 5.45 ringgit from 5 ringgit. This is after we assume a lower cost of equity. Really, our investment thesis has not changed, which is the potential for public bank to do capital management, which will provide a boost to dividend yields, as well as will be positively felt on ROEs. Apart from that, the stock is also a beneficiary from any strong liquidity inflows into the equity market, given that it is a big cap liquid stock. Okay, I will stop here and pass on to the next speaker.
Thanks, David. Hi, everyone. So I'll be presenting on IOI Corporations on behalf of Lee Leng. So yesterday, IOI Corporations hosted their analyst briefing following the second quarter of FY 2026 quarter report. So FFB growth was reported at 5 to 8% for FY 2026 forecast. So in 7 months FY 2026, I recorded FFB growth of 9.5% year on year. So this was above our 3.9% projections and management's original guidance of 3.5% growth for FY 2026. So IOI now is guiding for higher FFB growth of 5.8% year on year, expecting output to moderate in the next few months due to the low output seasons. Hence, we raised our FFB growth assumptions slightly to 4.6%, which increased from previously 3 to 4%. On unit cost front, the unit cost fell 4% Q on Q in second quarter FY 2026 to around 1,754 ringgit per ton, which is down 9% year on year. So this brought the first half FY 2026 unit cost to negative 7% year on year. Fertilizer applications has caught up during the time frame, with 60% of annual requirement having been applied in first half 2026. So for full year 2026, fertilizer prices are likely to be lower by 3 to 5% year on year, although that IOI has not locked in yet full year requirements. With that said, IOI expect the unit cost to decline year on year on the back of improving yields. Therefore, we adjust our unit cost assumptions accordingly. On the downstream divisions, IOI downstream division remains profitable in second quarter FY 2026, although EBIT margins moderated to 0.3%, which fell from 2.9% in the first quarter. Going forward, while both the refinery and oleochemical segments will remain challenging, by our view, there will be an upside from its specialty fats associates coming from full year contribution from its new plant based in New Orleans in the US, as well as the maiden contribution from the new plant in Amsterdam, which expected to be completed for phase 1 in September 2026. IOI also ventures into a new business segment. The first one is coconut facility that will start construction in 2026 with 3,600 acres planted so far, and also its palm wood plant, which has seen yield improvement, but sales volume remain low, however. Therefore, we still like IOI. Therefore, we maintain the buy call with relatively unchanged SOP based on TP of 4.85 ringgit, after considering in the 2% ESG premium. Therefore, we tweak up our FY 2026 to FY 28 earnings by 1.7%, 2.5% and 2.7% after adjusting the higher FMB output and lower unit costs. That's all from me. I pass to the next speaker.
All right, thanks, Hilmi. I'm presenting on Malakoff Corp results. So for the full year earnings, it's in line with Street about 104%, but just below ours about 82%. I think the main variance to our numbers are from the weaker associate and JV contributions, and also lower energy payments from coal plants. So even for the fourth quarter, they actually reported a slight loss of about 7 million. This is mainly due to the shutdown of the Tanjung Bin energy plant. Recall that in October, they did see a fire incident, and hence the plant was shut down for about 3 months. Aside from that, there was also a turbine disruption at the Tanjung Bin power plant as well. However, this was offset by high contributions from Asagari Energy during the fourth quarter. We do expect Malakoff to announce a final DPS when they come up with their audited statement results next month. And based on that, we are still looking at about 85% sort of a payout ratio. So this gives you about 4% yield at the current price. Despite the weaker 4Q, we do think that earnings this year will rebound because we do think that TB operations will normalize because the plant has already started operating at the end of January. Aside from that, if you recall, there was an incident at Jetty and clearing works already started earlier this month. And we do think that that in terms of the coal supply will continue to normalize as well. So we expect a full year energy and capacity payments from both the coal plants this year. And hence we see a sort of inflection point in terms of earnings from Malakoff from last year to this year. So we maintain our buy call. Our target price of 93 cents is unchanged, as well as our earnings for this year and next year. And we take this opportunity, any share price weakness to accumulate because we do expect better earnings contribution from both from the two coal plants. So that's all for us for today. And thanks for joining, and I'll see you tomorrow for the next morning cuppa.